G'day traders, 1 minute mindset reset. Try to keep it to a few minutes. Beautiful weekend, summer is here, and Memorial Day in the United States of America. And typically, if you go back and study 3-day weekends where the US session, the New York markets, New York session, and the United States are on a holiday, that can often coincide with some large moves in a 3-day cycle. And that narrow range day, inside day, which can typically lead to a parabolic move. And I've put that video link, I'll add it again in the description box. But we also have a non-farm payrolls week. We have a beginning of a new month, which kicks in timing cycles. And if you go back and watch the video of new months, at the beginning of the year, we did a video opening range, January, February, the importance of understanding that at the beginning of a new year. And then when we head into a new month, how typically a high or a low of a month can end up being a target for a parabolic move, a 3-day setup. Perhaps it could be on payrolls, and that could lead into a news catalyst opportunity, or even a 3-day setup heading into the following week where payrolls becomes a pump or a dump type of day into the close of the week, into the week. More importantly though, when a new month starts, we have 3-day cycles that can lead to large parabolic moves. And those parabolic moves typically will usually hit one side of a month's high or low. And you can just visualize that. You can go and look at your daily charts to understand that when we hit a new month, that can be an important reversal or continuation area when the new month begins. So again, we have a 3-day weekend. We have a non-farm payrolls week. And we have the beginning of a new month starting, I believe, Wednesday or Thursday. Thursday is the first day of June. So the potential for huge parabolic moves are there. Now, coming back to just stepping back and looking at thinking of a box. Now, I talk about classical charting, talk about Peter Brandt a lot, and his learning from Schaubacher, Edwards and McGee, almost 100 years old now, Bill McLaren, and box, prices in a box. And markets only do 3 things. They break out, pull back and continue. They break out, fail, and reverse, or they stay in a range-bound market, a trading range, which we saw earlier in the week, last week, on the pound yen, euro yen crosses. So classical charting is breakout charts, breakout trading. They trade the breakouts of large geometrical structures, ascending triangles, descending triangles, head and shoulders, and rectangles, just to name a few. Those are some primary major patterns. And so a lot of breakouts, for example, the turtle traders, most breakouts fail. And so when you understand that and you have a larger 3-day setup, that's where false breaks in the timing cycle, the importance of timing. People keep asking, what about it broke out here, it broke out here? It's not a false break. You have to understand, again, the opening range, the initial balance, and then peak formation, consolidation. Just like today, we have a narrow range day in the US session occurring. We had Asia and London markets are open. Peak formation. And we give the appearance in that first hour of movement. And this is typical. Go back and study a 3-day weekend in the US session. They will move the market maybe 25 pips, and the second hour opens and bang, they pull it right back inside and get traders who are long or short, whatever. And then it goes into consolidation for the rest of the session. People are trying to trade that, thinking that there's going to be trading opportunities and a large majority of the 3-day weekends on the Mondays, and there's no trading in the US session, they'll just trade sideways in a very, very narrow range, and traders get trapped on those days and have to wait until the new day when the market kicks in again and a new cycle starts. So very important to be aware of that. But this week we could see some very large moves or a very large explosive move on payrolls heading into our new month. So very important. Again, 3-day weekend, narrow range day on a Monday. We have a new month kicking in on Thursday, and we have non-farm payrolls on Friday. Big week, huge parabolic opportunities. And just stepping back and understanding the asymmetrical risk reward of range expansions of an opening range and initial balance, or the parabolic opportunity if indeed a range expansion opportunity presents, and potentially maybe on a 3-session setup. Regardless of the session that you're trading, there may be a 3-session opportunity on day 3 in Asia. There may be one in London, or we could get it on on Friday, in the New York session. And on Friday as well, a first possible catalyst, momentum trade opportunity on payrolls. So again, be patient. There's going to be lots of opportunities, guaranteed. There always is, every week. Rinse and repeat. Keep it simple, stay focused. Target the highest probability opportunities. Stay on top of your own emotional, impulsive, irrational, impatient behavior. Don't give anything back. Put it in your own account, rinse and repeat, scale it up in size. Have a great day, traders, and may the markets go with you.